Hello, my name is Curtis Storr, and for those of you who don't know me, I'm a real estate investor and a financier. Basically, what that means is I'm good with math and I work with real estate investors, and I am one. What I've done for you today is I've built this mortgage reduction calculator. It's a pretty nifty tool to have. What you can do with this thing is you could punch in the yellow areas right here. You'll see there's some yellow areas and then green ones, information regarding what your loan is over here, the purchase price of the property, and what the loan is. Over here, under additional payments, you could punch in if you were to make additional principal payments. And before I dive further into this, I want to make that clear. When you send in additional payments to your bank, your lender, make sure they know to apply that to your principal. Otherwise, they could just apply it as an additional payment. And I'll show you what happens if they do that. Down at the bottom, you take a look down here, you'll see 3 tabs. The first tab and the second tab marked monthly or yearly payments. One is just that, and the other one has a 2 after it. They're identical, obviously. The reason I did that for is a lot of you have asked me, I like to do comparisons. Could you add another one so I could jump back and forth and look at the differences? Let's say your percentage down, you're getting an FHA loan, you're putting 3% down. And so you put 3% in this area right here, but everything else stays the same. Now you saw everything changed on the screen. You could jump back and forth and take a look at how much interest you're going to end up paying in that scenario versus this scenario. That way you could see that you actually are, since you put less down, you're going to pay more interest. Anyways, the third tab here is track actual payments. I put that in there because like all of us, even though we may set a goal to pay an additional $100 a month, we may not do that. You may pay $100 one month and $200 the next, or nothing. So you can put those actual numbers down in this area here where I made it yellow. This is a whole different spreadsheet, but this is the one that's going to be your record keeper. You can see when you made these payments, and you can see how your savings can go up. This is an extreme example here, and I'll go over it in a little bit. So let's jump back over to our monthly or yearly payments. Because here, this guy has not made a commitment to do either. And let me show you what happens though. Here we are, $250,000 purchase. We put down 10%, which is $25,000. Pretty simple so far. The loan amount is $225,000. Your typical 30-year term. But I punched in this interest rate for a reason, 5.8, just to show you that if a person does not make any additional principal payments monthly or every year, this is how much you're going to end up paying right here. Let me get my cursor out of the way. $500,000. And you say, well, wait a second. I bought a $250,000 home. Well, after 30 years, if you make all the payments on that loan, you're going to be paying $500,000 for that home because of the interest you're paying up here. You'll see that. That's pretty crazy. And a lot of people don't realize this. It is required on your paperwork when you sign for the loan and the mortgage when you purchase your home. But a lot of us, I did it, you just ignore that. It doesn't matter. What matters to most of us is we bought it at $250 and what our monthly payment is, which is right here. And that's just what we go on. And that's the reason I built this thing. You can, if you would like to, you can look down here and you'll see on this loan here, they're only applying 17.63% of your payment to principal. The remainder goes to interest. And in numbers over here, you'll see that that's $1,087.50 of your $1,320 payment went to interest. That's why you end up paying $500,000 for a $250,000 purchase, putting down 10% at 5.8% interest rate. Pretty wild. So that's why I built this thing. Not only so you have a really cool tool to take a look at things, but as a learning tool. You can learn from this by seeing the actual numbers. A lot of people, when you sign those papers, they kind of skim over that. It doesn't really hit home. And that's what my trainings are all about, is to slow things down and give you the tools that you need to open your eyes up to what's really happening when you make financial decisions. My whole mission is to get as much information out to you so you can make better decisions. And the end result is, one of the end results is going to be, you're going to put a lot more money back into your pocket. Let me give you an example. If you were just to pay an additional $100 a month, up here you'll see that, you save $47,000. Bringing down that purchase now, if you look over to the right, to $450,000. It's still a lot, but you'll see what you can save. And that's why I added the track actual payments. It'll bring that 100 over here and show you what you planned on doing. But down here you could say, okay, I put in 100 this month, and I put in 200 this month, and I put in 0 this month, and you could go down the row and track actually what you're putting in. All these other numbers really don't change that much, so they don't matter. And for people who are visual, I put in a graph over here. And what you'll see in the graph is that it looks like the 26th year your mortgage is paid off. So you could see in years when your mortgage is paid off, and that's at $100 a month. And if you scroll down below, it shows you the numbers that created that graph. So if you want to look at the graph, great. If you want to look at the actual numbers, you just scroll down here, and you'll see that in the 25th year, that's how much you owe in principal, and you're done. And a lot of you are pretty keen, so you probably caught on tracking actual payments that the savings was $200,000. Well, this is an extreme investor. This person basically, let me get rid of this. This person basically decided to put in $10,000, you'll see down here, $10,000 after the first year, which can be pretty smart. And since they made more money, and they put in double that. So let's say you put in double every year, which I don't think you can really do. But this is just to get you thinking. So every year this person put in double, and you can see over to the right, they paid off their mortgage in 7 years doing that. Crazy. That's why they saved so much. But anyways, go ahead, download the mortgage reduction calculator and have fun with it. And I'll see you in our trainings. Thank you.